Question by Wadia, and he says, how do fund managers maintain liquidity in their funds?
There are 2-3 levels of maintaining liquidity, 2-3 ways of maintaining liquidity. One is that you have liquid stocks. So even the small cap funds are allowed to have, they are not supposed to be having 100%. They have the flexibility of investing 65% and remaining elsewhere. Okay. So they could be investing in investing in liquid stocks is one. The other is that every fund is allowed to have 5 to 10%, 15% into in cash, okay, which is short-term debt or cash. So nothing is cash as such. Even the cash there generates a little bit of return, whether it be overnight call money. And I think the principle, in a routine way, in a normal situation, the fund's liquidity is entirely met by the flows. Because if you are a fund, a lot of investors are putting their money in an open-end fund, and some investors are taking their money out. So if the net outflow from a fund is less than the inflow, if there are investors who are putting 500 rupees in a fund, and investors who are pulling their money out is only 400 rupees, so the fund manager has to do nothing about it. He is still getting 100 rupees to be invested. Fund managers have to worry about liquidity only when the outflow is more than the inflow. When you get less money, and when you have to pay out more money, more investors are queuing up to take their money out. That is when you have to worry about what to sell. And for that they have the cash or the short-term debt or the liquid stocks in the portfolio. And beyond that, if there is a run on the fund, then that's a risk. Because when a fund manager is forced to sell their stocks at the inopportune time, and those are the occasions when which are not so pleasant, because most investors come in mass only when things are very bad, market is crumbling, market is falling every other day, and that is the time when the fund manager also finds it difficult to sell, and his selling only leads to bigger fall in the underlying stocks that he plans to sell. So that impacts the negative, that impacts the NAV of the fund far more substantially.